Okay, guys, this is your income statement again. You know, on your income statement, we are trying to calculate what? We are trying to calculate our profit or loss at the end of the year again. So you only consider what? We are trying to calculate again our profit or loss, and you only consider what? You consider your incomes or expenses, right? Okay, so here is always the format, right? But you have to actually look at your trial balance. Your trial balance is something like that, which gives you the list of incomes and expenses of a particular business, right? The first one is sales. Sales, you always take the what? The balance from your trial balance, then you deduct what? You deduct your debtors allowance. Always you deduct your debtors allowances, okay? And then you deduct any other thing which might have happened in the business. Then you have a cost of sales. Your cost of sales, you always get this balance from your trial balance. Same as your sales balance, you get it from your trial balance, right? And then you know, for you to get your what? Your next item that we call gross profit, what do? You need to actually do what? Say sales minus gross profit, right? And then the next line item is your other operating income, right? So under other operating incomes, we look at our incomes only, again our incomes, right? So your incomes can be provision for bad debts adjustment, right? For you to have a provision for bad debts adjustment income, right? It's when your old provision, right? You have your old provision, you have a new provision, right? So if your old provision is 3,000, for example, and then your new provision is 2,000 when you calculate it. So meaning if your old is more than your new, or in simple terms, if you are decreasing your old provision, then the difference of 1,000 will be an income, right? So I repeat again, if you have to decrease your what? Your old provision. So as you can see here, from 3,000 to 2,000, we are decreasing it. This provision will be in income, right? And then it will fall under what? Provision for bad debts adjustment as an income. Again, so therefore, after calculating it, you need to show what? Hi, ma'am, I minus this from this, and it gave me this. Okay. Then you have your bad debts recovered, right? Your bad debts recovered is when a debtor comes back again and pays us. This person is actually no longer our debtor. We had written this person off from what? To our bad debts. So meaning if you write a bad debtor, right, to the bad debts, they will no longer be our debtor. They are now a bad debtor. So we are going to now, when she comes back and pays, you are going to record it as an income, as bad debts recovered, and not what debtors control. So therefore there is the amount. Then you have what? You have trading stock surplus. For you to get a trading stock surplus, right? For you to get a trading stock surplus is when what? Is when your stock on the system, right? Stock on the system, it is the stock that is on your trial balance again. So when the stock on the system is what? Is less than the stock on hand. When it's less than the stock on hand, you are going to get a difference of what? Of trading stock what? Trading stock surplus, right? For example, right? If the stock on the system, right? The stock on the system is what? Is 3,000, right? But now your stock on hand is what? Is 1,000, right? So meaning, I'm sorry, it's what? It's 4,000. It's 4,000. So meaning if the stock on the system is less than the stock on hand, we say that we have a what? We have a surplus of what? Of 1,000. So please do remember this. If we have a trading stock surplus, is when the system stock that we get from our trial balance is less than the stock that we counted, right? The stock that is what? That is on hand. That will give you a what? A surplus, right? Okay, so moving on, that will be your what, your surplus, and you need to show me, or ma'am, I had to minus the train stock system by the train stock on hand, and it gave me a surplus. And then for rent income, usually they have what we call rent received in advance, and you have to minus it. But the balance, this balance that I'm writing, you get it from your trial balance, right? Most starting balance, they come from the what? From your trial balance, right? Then you'll get that particular amount. Then you have commission income. Usually what they do with commission income, they will create an accrued income. And then when you have an accrued income, you need to add the accrued income, right? Then you have discount received. Discount received is when we buy from our creditors and then they give us discount. So this discount that we got from our creditors, you're going to record it here as an income, right? Then you add all of your incomes, then you put the amount here, right? So so meaning your other operating income, you add all of your incomes and then you put the amount there, right? And then for your gross profit, your gross profit is what? It's sales minus what? Cost of sales, and then that will give you your gross profit.